Regional US banks have come under extreme selling pressure overnight as investors fret about the fallout from the collapse of SVB and Signature Bank. The overall US banking sector dropped 7% in Monday's trade, while shares in First Republic plunged 62%, Charles Schwab lost 12%, and Western Alliance shed almost half its value. US President Joe Biden has promised to do whatever is needed to protect the banking system after a rescue package failed to quell concerns of contagion. The drain of deposits is continuing to place pressure on liquidity on the wider banking system. Banking expert Fariborz Moshirian says the stability of US regional banks is now in question.
Well, definitely we have concern about the regional banks in the United States because now we realized with what happened in the last couple of days that the medium-sized banks in the United States could potentially create systemic risk which has led basically to the global financial crisis. For that very reason, I think the regulators and others in the United States are concerned about basically the stability of the regional banks in the United States. However, with regard to Australian, for instance, regional banks, I don't think we should compare Australian banking system with the dual system that we call it in the United States, where banks are regulated often by federal as well as state, if you like, regulators. So it's a different system and we shouldn't be concerned about our smaller banks.
Okay, well, two banks have already collapsed. Do you expect more regional banks to follow in the US? I mean, just how stable is the sector?
Actually, it's quite volatile, I have to say. You know, when you look at the news coming out, there are other regional banks which are under enormous pressure. I wouldn't be surprised that we could see some other, if you like, challenges ahead in the immediate days. But at the same time, the regulators in the US are becoming far more proactive in recent days, as we know. And it's really a matter of wait and see. But there's no question that many investors are pulling out their money from other regional banks from the United States. And often people are saying that maybe larger banks in the US are going to be the winner in this process.
Is there any comparisons that you can see to the situation that played out during the subprime mortgage crisis?
Absolutely. I think we shouldn't forget the very famous statement by Ben Bernanke, where he came and said, subprime problem is a small, section of the US banking system, and we never are going to have global financial crisis as a result of subprime. And surprisingly, we have seen global financial crisis. And the reason for that, we need to be concerned, not that I'm predicting there's going to be a global financial crisis next week, but the interconnectedness of international banks as well as regional and national banks are so high, indeed far greater than 2007, 2008, that we shouldn't underestimate the potential of systemic risk.
So what impact is this having on the banking sector more broadly?
I think this has been enormous, if you like, opportunity as a wake-up for global banking system, national as well as regional banking system, because we have realized that the world is much more complicated, and in an environment where interest rate is rapidly rising, it's a new, if you like, charted territory where we're dealing with high inflation, high interest rate. Suddenly we could end up with a potential problem which could damage the entire global economy.
Worst case scenario, Fariborz, how many regional banks do you think could go under?
Frankly, I can't really put any number, but what we are seeing at the moment is that regional banks in the United States are under pressure. The fact that now they are saying that earlier deregulation of banks in 2018 in the United States has created, if you like, the current systemic risk at regional level. We need just to really wait and see how we can contain regional systemic risk, which doesn't become a national and potentially global systemic risk.
Fariborz Moshirian, thank you.
Thank you.
Well, taking their lead from Wall Street, stocks here sold off almost 2% on the open today before recovering slightly. The All Ordinaries and the ASX 200 closing around 1.5% lower. The Australian dollar is buying 66.5 US cents. Meanwhile, the US bond market is seeing some of its biggest moves since September 11 and the 1987 stock market crash. Two-year US Treasury yields were above 5% before the news of SVB broke on Thursday. They've shed more than 1%. While the 10-year bond yield is down nearly 0.5% as traders rush to reprice future interest rate movements. Well, last week, US traders had a 70% bet on the Fed raising rates by 0.5 percentage point. The odds are now on a 0.25 percentage point rise, with a 30% chance of staying on hold. The market here is now pricing in a greater than 98% chance for the Reserve Bank to hold on interest rates in April. Despite the collapse of SVB, Saxo Bank CEO Kim Fernay says the Fed will continue to tackle inflation.
What we actually have seen in the fixed income markets now is that there's been a major rally in the fixed income markets, so hence that people have flight to safety, and that actually limits the problem that the SVB had. And in the end, I guess that the Fed needs to focus on inflation, and that's the key thing here, and we need to get inflation down. So I'm sure they're going to hike the rates.
The bank founder is also unable to rule out a credit crunch down the track.
Fear is a bad thing, and because it undermines trust. And when there's no trust, there can be a credit crunch. And let's hope we don't get there. But of course, you know, when you have a situation where the debt levels and whether these are the government balance sheets or for many corporates and even private individuals, you know, debt levels have been going up for quite some time. When inflation hits and interest rates are going up, servicing that debt is much more expensive, and that will have some consequences. So that, of course, we have not yet seen that, not in the job market, not in any major defaults. I think most banks, even more or less on a global level, haven't seen a lot of credit losses from their clients for many years. And I'd be puzzled if we did not see that at some point.
The venture capital market has been roiling since the collapse of SVB, but Jackie Vullings from local VC firm Airtree says this shouldn't have a long-term impact for startups.
It happened very fast. It was the first real bank run on a major bank that we've seen in the age where people are hyper-connected on mobile phones with Twitter, and I think you could really see that in how quickly the news spread and how fast it unravelled.
With respect to Australian companies that have been caught up, we reported on those last night, Canva being one of them. It's monitoring the situation. How does the SVB collapse impact on the domestic market and how it might operate?
Fortunately, there weren't that many Australian startups exposed. It was a minority of our portfolio who had an account with SVB, and only a few companies within that portfolio who had meaningful exposure where payroll was at risk. Longer term, I think we'll see companies be much more thoughtful around diversifying their bank account base, looking closely at their billings providers, their payroll providers, to ensure that those companies are strong, and ensuring they have strong cash management policies in place.
So just how instructive can the SVB collapse be for those working in this industry, the VC industry and the startup industry?
This is a relatively idiosyncratic event. It just so happened that a kind of large macro phenomenon met a bank with a very concentrated deposit base, and a kind of situation that quickly unraveled. But in the longer term, if you look at the tech sector more broadly, 1 in 16 Australians are now employed in tech. It's growing at twice the pace of the employment of the average sector, and continues to be a meaningful growth area for the Australian economy. So long term, we're still very optimistic.
So what might Airtree do differently now, if anything? Will it change your strategy? Are you concerned about the money that you hold with any banks?
Absolutely not. So we were fortunate not to have any money with SVB. I don't believe any Australian VC did. It changes nothing about how we're operating. We're continuing to invest early in the most ambitious founders, building global businesses from Australia.
And so how then, if at all, might this impact on the Australian VC market and startups looking for funding?
This is one more negative news story, which isn't helpful in a tight capital environment. Potentially this leads to that tight capital environment lasting a bit longer than expected. We've been working with our companies for over a year now on ensuring they preserve runway to make sure they get through this part of the cycle and are prepared for growth as and when those capital conditions improve.
Jackie Vollings, thank you.
Thank you.